We're only a few days in the second Trump administration. Like everybody else, I got to figure out what all these executive orders flying around mean for particular industries. For example, the oil service space seems like an obvious winner, right? I mean, think SLB or Halliburton. As the president signed an executive order on Monday that basically removes virtually all barriers to drilling. Of course, that doesn't mean the producers will just drill, baby, drill, though. As our go-to energy expert, Rusty Brazil of RBN Energy, explained on the show last night, Trump may want production. I don't blame him once prices lower. But it's up to the oil and gas companies to actually do the producing. And they know that more supply translates into lower prices. Sell. Thankfully, both of the major oil service places, SLB and Halliburton, have now reported their fourth quarter results. SLB reported last week. Halliburton turned in numbers just yesterday morning. So we've got a better sense of what's happening in this industry because there may be some real value here. First, let's talk about SLB. Now, it's formerly known as Schlumberger, which is the larger and more international of the two. The stock took off last Friday in response to a strong quarter. SLB posted modest top and bottom line beats. Their North American business delivered the most upside, comfortably ahead of their expectations. Their larger international business was in line, thanks to some softness in Latin America. But the real story from SLB, as is typically the case, was management's commentary about the future, which I'm going to have to classify as cautious, but not terrible. One analyst from J.P. Morgan called it better than feared, and that sounds about right. At least to me, CEO Olivier Lepouche, he noted that in the back half of 2024, his customers, meaning the oil and gas producers, quote, adopted a more cautious approach, primarily driven by concerns of an oversupplied oil market, end quote. But then he added, quote, although these concerns persist, we anticipate the oil supply imbalance will gradually abate, end quote, citing global economic growth and a heightened focus of energy security coupled with rising energy demand from AI and data centers. Yes!
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.